Hello and welcome to another update video about silver. As we are preparing for a new trading week, silver ended the trading week with a sharp pullback, very sharp pullback. Came down, I think $2, $3. Tried to break sort of above the $32 mark and failed there. Could not, however, break above our resistance range up there, highlighted in red. So still caught in the range, not yet broken out of the range, and instead broke below this micro support area that we were watching and that it really needed to hold in order to keep up the upside momentum it's built. Now you might remember from my last video that I highlighted this here looked like a 5-wave move, and I think it was, but it probably wasn't a 1-2. I'll show you what I have to consider now. Was actually on the chart. So the idea is still, a wave 1 topped here around the 20th of May, a wave down. For me, the best way to count this correction, looking at the microstructures, is to consider this here an A, B, C flat structure. A bit unusual with that overshooting B wave to the downside, but flat structure makes sense here, given that we have 3 waves in a correction, the first leg or first wave of that corrective ABC structure. Then we had an A wave up, a B wave down, and a 5-wave move up in wave C. And given the proportions of the different waves in such a correction, we're typically targeting 100% extension of wave A in the C wave, and yeah, it pretty much did that. That was at $31.60. So all I want to share with you is that at the moment nothing unusual is going on. It just couldn't, or the silver bulls could not maintain a breakout. Well, a breakout attempt wasn't really made, right? So we didn't even break above resistance. It's always that initial 1-2 setup that would give us confirmation that, let's say, a low has formed. Yes, we had the 5 waves up, but we did not have or hold the corrective pullback. Also, this move down doesn't really look corrective, so it looks rather impulsive. So it's probably that wave C of 2. With the latest microstructure that we're dealing with here, what we can do is then calculate projections for wave C to the downside. And this is now where we've arrived. Okay, it would be this additional area that I've just added to the chart into the support region between $29.15. That's a good overlap here with the 50% fib retracement as well. And then down there, we've got the 1.618 extension at $27.75. So that's an additional area to watch with the golden ratio in between at $28.37. So as long as we are holding this area, everything's good. We can turn around without breaking key support. And even below the white, let's say, target zone, there's one more level at $27.33. That really needs to hold to maintain the perspective that this pullback here is a wave 2 with a 3rd wave rally to come into the $38 to $40 region. But for now, there is no confirmation of a low in place. But next week, the key levels to watch are these support levels, especially the $29.15 level here. There's confluence. And okay, what would be an early indication that a low has formed? It would be a break above the 50% retracement of the C wave to the downside. So a break above $30.32 would be an initial indication that a low has formed. This would not then need to be confirmed with an additional break above the B wave high at $31.55. That's my update about silver. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you are interested in daily updates about the S&P 500, as well as regular updates about stocks, then feel free to check out our stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.